Good morning, friends. Welcome to SBI Securities morning con call. In today's con call, we'll be discussing what to expect in Nifty and Bank Nifty from here on, as well as the key levels for both the indices. We'll also be discussing the key sectors in focus in trade today. First up, coming to the update in the global markets. So if you see, all the major indices continued the positive momentum, ending the session on a strong note with gains of 1 to 1.5% apiece. Currently, if we see, the US indices are trading above their short-term and long-term averages. Looking ahead, the S&P 500 is poised to continue its upward momentum, potentially testing 5,670, 5,730 levels as the next short-term target. Coming to Brent oil, so Brent oil has ended at 77.5 on Tuesday with a loss of 2%. Going ahead, the zone of 79.8 will act as the immediate resistance for Brent oil. This negative trend in Brent oil prices is a positive for oil importing economies like India. If we see, the dollar index has breached the 102 level as the major trend of DXY remains bearish. Any sustainable move below the levels of 101.5 will lead to further selling pressure in the index. Coming to the update regarding our markets in trade yesterday, so the benchmark index failed to sustain above the zone of 24,630, 24,650 levels, which is the 61.8% Fibonacci retracement of the prior downtrend. Thereafter, it traded in a narrow range of just 115 points and formed a small body bearish candle. This shows a lack of bullish momentum near the crucial resistance levels. Going ahead, the zone of 24,650 will act as the immediate hurdle for the index. Any sustainable move above the levels of 24,650 will lead to a sharp upside rally towards 24,760 followed by 24,850 levels. While on the downside, the zone of 24,470 will act as the immediate support for the index. If we see the option chain data currently, that is for the weekly expiry, 24,600 has significant call open interest followed by 24,700 strike, and on the put side 24,500 has substantial open interest followed by 24,300 strike. Coming to the update regarding Bank Nifty, so in trade, Bank Nifty failed to sustain above its 20 and 50 EMA levels and thereafter witnessed selling pressure. Since the last 10 trading sessions, the index has been oscillating in the zone of 50,830 and 49,655 levels. Due to the consolidation, the short-term moving averages have started losing their curvy nature. If we see, the trend indicator, that is ADX, is quoting at 16.27, which shows a lack of strength in either direction. The key levels to watch out for Bank Nifty going ahead, that is, so 50,850 will act as a crucial hurdle for the index. Any sustainable move above 50,850 will lead to a sharp upside rally towards 51,200 followed by 51,500. While on the downside, the zone of 50,000 will act as the immediate support for the index. If the index slips below the mark of 50,000, then the next support is placed at 49,600. Coming to the key sectors in focus, so if we see, Nifty IT, Nifty Pharma, Nifty Healthcare, Nifty Oil and Gas are likely to outperform in the short term. While on Monday we witnessed that Nifty PSU Bank and Nifty Metal witnessed a pullback. However, we recommend to avoid these sectors as of now, since the short term trend for these sectors continues to remain on the bearish side. Coming to the FII DI data, so in the cash segment specifically, FII sold to the tune of 2,667 crores, while DIs purchased to the tune of 1,802 crores. That's a wrap of today's edition of the podcast. Thank you for regularly listening to the podcast. Wishing you all a happy and energetic trading session ahead. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.